Hi, hi. Great you are here. Hello again. Welcome to the next session, TE360. I'm excited to have again a lot of people in the channel. Today it's a little bit more, how should I say, hands-on. And this is why I removed the birds singing, but next round in the final one, we have it again. Okay, and before we start, I'd like to make a short statement. You might know I'm located in Berlin. A lot of token engineering people are located in Berlin. And since February 24, we are facing a war in Europe, the invasion of Russia in the Ukraine. We have community members from the Ukraine, token engineers, developers. We try to support refugees actually from both sides, Ukraine and Russia. And we get horrible news on massacres, war crimes, terrible suffer every single day. In this call, we have the opportunity and the luxury actually to focus on Web3 sustainability loops today, on the economies of the future, and that's great. But let's take a moment before we start to quietly think of all those who have to fight these days, who have to flee or die. They lost their lives without any perspective of a brighter future. And I would love to take a few moments and not get this unnoticed. Okay, we start the session today. Today, our TE360 is about more about the founder's perspective, looking at cryptoeconomic systems. So we all talk about building economies, not products. What's the difference here? And in this session, we'll discuss particularly from the perspective of a founder or a DAO member, how to kick off, how to get these economies going. Trent as being the founder of Boson Protocol. And maybe most important first step is keep in mind growing a Web3 project is not growing signups only, customers or revenue. Growth in Web3 is growing an ecosystem and make it truly self-sustaining. And the token is a tool to it. Now, basically in his article, Trent analyzes such an ecosystem. And the major questions, do the dynamics in this system truly support growth and long-term sustainability? And what if, for example, grants are a black hole or grants just have a dead end, or will the ecosystem survive? And in his analysis, Trent explores three different systems. One, the company business model. Second, the nation level sustainability and growth models. And then last but not least, Web3 sustainability and growth models. And in this session, I'd like to show some slides. Let me pull it off. Give me a second. Okay. Okay. You can see my slides, I hope. Okay. So now before we start the discussion, I'd like to quickly go over the company business model and nation state sustainability loops, and then discuss what you see similarities and difference in Web3 token models. Maybe to give me a picture, you want to raise your hands in case you have read the article. That's helpful for me to better understand. There's this button, raise your hands. Okay, yeah, cool. Okay, thanks for letting me know. All right, let's first take a look at the company business model. In the simplest or a simpler version of it, at the center, we have the workers, company employees who do work to grow the company revenue. I quote the article here, by bringing the company's product or service to market. That's how we know it. The company's management, we see it on the left, allocates, curates the company revenue to get more resources, like new product features, new product, new verticals, spin-offs, whatever, or hire more workers to grow the company even further. So it's a loop. The revenue is put into growth. If allocated well, begets more revenue. Quite simple. Now, in the expanded version, there are additional elements. The company issues stocks, as you see it on the left, and there are shareholder rewards at the lower left. And Trent now explains this by the example of Amazon, founded by Jeff Bezos. I quote the article again. In the previous sections of what we've seen, just in the previous slide, we described the Amazon loop and generalized upon it. However, it's an incomplete picture of Amazon's story and other businesses. Revenue alone did not solve for cash at critical junctures. First, Amazon needed funds to get going in the first place. It needed those funds to hire employees who then build the initial product in order to start getting revenue in the first place. And second, furthermore, as it was growing, it was at risk of getting outrun by faster moving competitors. So Amazon needed more funds to grow aggressively, and revenue alone was not enough. Okay, sustainability loop based on revenue. Now the additional elements: issue company stock and rewards for shareholders. And that's what Amazon did. It issued more company stocks and sold that stock to investors for cash. And it issued stock to address the two junctures above, kickstarting the business. And here he quotes Jeff Bezos, maybe first sold some stock to friends and family. And second, when Amazon's business was starting to get traction, Jeff Bezos raised money from VCs to grow faster. Issuing stock is useful for kickstarting businesses and for catalyzing growth. It has one more critical use. Stock can rescue a business in pain. If the business is doing poorly, the company can issue a lot more stocks, potentially at lower valuation, and then sell that stock as a way to survive and see another day. These are the functions of stock. Rescue a business in pain, and issue and sell stocks as a way to survive. All right, that's the business perspective. And there's one element, an additional element, shareholder rewards, in this lower left section. The company issues and sells stocks. The company works to grow the revenue and the dollar value of stocks, middle right. And the company's product services are designed such that the usage increases and the value of this stock does too, on the top right. And then finally, stocks give the company optionality to give shareholders some lower bound of reward, such as dividends and buybacks at the bottom left. And this keeps investors happy over the longer term when there was less revenue growth. All right, if we this is very typical in the stock market. You either have increase in, or sometimes both, increase in the value of the stocks itself or additional dividends or rewards to the shareholders. Right. This was accompany sustainability loop. Now, in the second step, Trent compares this with a nation-state model, nation-level sustainability. The simple version, again, looks like this. I quote Trent: nations take revenues from taxes. They use that revenue to create and grow an ecosystem of laws, public infrastructure, defense, etc. And now maybe we can first draw a line between nations and crypto ecosystems, because we also have, you might have heard about code is law, policies implemented in code, public infrastructure, the protocol itself, defense. We already see units in DAOs with the purpose of defending the system, security measures. But let's go back to the nations. They use that revenue to create and grow an ecosystem of laws, public infrastructure, defense, etc., so that citizens can thrive and conduct commerce. When citizen and businesses' well-being goes up, tax revenues go up, and the nation becomes more successful. This is a simple version of the loop. And if we take a look at a similarly expanded version, there is a new element, the outer circle, and Trent adds here printing money. And he mentions, here we go. Yeah, print fiat on the left. He mentions Jay Forrester, MIT professor, and his systems approach to model national economies. And I quote again, this picture summarizes a machine for a well-designed national economy. It starts with the tax-powered revenue loop in the center and adds fiat to the picture. The government prints fiat on the left, which is then used as income alongside tax to be curated and spent by the government. The nation performs work to grow not just GDP and tax base, but also the value of fiat itself. Now, of course, how printing money is described in this article or in this overview is very simplified. And if you'd like to learn more, you can definitely start with the Wikipedia article about fiat money. And by the way, understanding monetary policy is really a must for token engineers to understand how we can improve on the macro level. Nevertheless, this is the nation-state sustainability loop. Now, I'd like to stop here before we dig into Web3 and hear what do you think, where do you see similarities between either businesses or nation states at the macro perspective, between those and crypto economies, token economies, or also questions, of course. You can let us know in the chat or check if your hand is raised. Raise your hand if you want to add a comment or a question. Okay. Right, Jeremy, you were first. Feel free to switch on your mic. Jeremy, still there? Okay, then let's continue with Alex.
Yeah, this all reminds me, they didn't touch on it explicitly, but how many of these protocol projects, you can think of Uniswap, you can think of others in Web3, they take pools of different crypto assets and they take more stable ones and they balance them against others. And this reminds me of the analogy to the current reserve currency of the world, which is the US dollar, and how in 1971 we separated from the gold standard. And again, kind of how we hedge that in Web3, this was obviously has become a problem, and this happens throughout history. But the main thing in 1971 was that, you know, we were spending more than we earned, so we printed more dollars. And because of our current culture now, we always print more dollars versus doing something like austerity. And so obviously, since there was an increase in the number of dollars without an increase in our country's wealth, the value of each dollar fell. And we're seeing that more and more now. And eventually, with changing world orders, this is hundreds of years, right? What usually happens is that cycle goes in a very common flow. This happened with the Dutch, it happened with the English, and now it's happening with the US. It hasn't obviously broken down yet, but we started seeing some of the problems in 2008 when we bailed out the banks and we printed more money as a result. And this is how you know, these great power shifts happen and global reserve currencies change. But that's just a comment I wanted to make, that this particular thing, as it relates to nation states and our current reserve currencies, these cycles end up failing for pretty consistent reasons. And I think there's a lot of benefits in Web3 because of that signal being purer. We know if something's failing earlier because there's no intermediaries like bureaucracies, like US governments. And that's the key takeaway from a very macro perspective. Thanks, everybody.
That's so your key point is, in a sense, if we look at this diagram, that the left side printing fiat or whatever, printing tokens, and the right side producing work, and that way make the value or grow the value of fiat is imbalanced, which at some point leads to collapse. And you're right, the hope or the perspective in token economies is that you have a much more direct signal on this balance, and maybe even more direct measures to take in case you have this imbalance. All right, I think it's still, there's a dispute. Modern monetary theory is a little bit on the opposite, right, in terms of printing money. And I don't know if you'd like to add something here, but thanks for this comment.
Yeah, sure. I mean, there's a lot of things that we're noticing, but these feedback loops are fascinating because, if countries don't have enough money to pay their debts, even after lowering interest rates to zero, and we see this with Web3 as far as APYs and yield, central banks always begin printing lots of money, and then it just causes feedback loops with different economies, labor, things get outsourced more and more and more, and because they're cheaper to produce products, you have inequalities grow as people who have the money continue making more, and then you get populism, and these cycles just continue until eventually, things change hands. Again, this takes hundreds of years, but it's fascinating to see it play out and comparing it to businesses at a lower scale, and then Web3 economies.
Yeah. All right. Thanks. Joes. Hello.
Hi. Hello. I like to just continue with what Alex just said, and I think Angela, we had this particular exchange before on modern monetary theory, and you're exactly right. What Alex said was the traditional explanation for the economy, but the reality is that it's quite accepted now that there's no direct correlation between inflation and money supply. Japan is, and many other countries are the most classic examples of that particular phenomena. And even now, even the US is actually following the modern monetary theory kind of an approach. It's what's called a heterodox approach, which is now accepted. But what is really interesting for us now is, like what Angela said, is that modern monetary theory allows for far better signaling. And in crypto, in the crypto economic systems, we have the tools for that particular signaling. So and that makes it extremely powerful. In fact, there's an Economist article which actually just talks about the real-time economic systems which is actually emerging. And this is going to completely rewrite economics. One of the fundamental problems about economics was that there was no connection between micro and macro. That is being established now. In fact, we have a meso also now. So this is what's really fantastic about what's happening now. That's it.
Yeah, thanks for this comment. I agree. This is it's opened up a new universe of how we can observe economies.
And it actually allows like your purposeful tokens allows for such fantastic granularity.
Right. Thanks, Jose, for sharing. Rohan, also raise your hands. Rohan, can you hear me? I think you're muted. We can't hear you for some reason.
No?
Now we can hear you. Yeah.
Yeah.
Oh, sorry.
So
go ahead.
I think since the discussion veered towards monetary theory, I'm not going to pretend to be an expert at any of those things. But my feeling is that, okay, so there is, no matter what the cycle or the loop is, sustainability, you're trading off one characteristic for another, right? So in the case of a company, you're trading off governance rights for the possibility of future revenue through the sale of tokens. And in the case of fiat currency, you're trading off seigniorage, which would allow governments to own a profit on their issuance of currency for.
What do you sell? It's just, I have a little bit of a problem with your audio quality. Can you repeat the last sentence again? I think it was important.
Yeah. I said, in the case of fiat currency, you trade off seigniorage against possible future growth. So you're effectively making a bet that a centralized entity would be good at allocating resources for the whole, or making that allocation to generate, well, not just profitable stuff, but actual durable goods that would help, that would trade off against the loss of profit right now, but would lead to greater seigniorage later. Yeah. So obviously, a lot of fiat currencies have failed in this because they end up going towards very speculative financial activity. We see this in DAOs as well. They just go towards more speculative activity than any sort of purposeful. So there obviously needs to be some sort of a signaling mechanism to break this cycle, right? So I guess austerity was mentioned. Okay, so you need to get back. So things are not working out. We need to dial back and maintain the seigniorage for later when we might actually need it. I guess in DAOs, it would be something like, okay, I don't know what the equivalent would be in a DAO.
This, you're raising a really, a question that is discussed where basically in crypto everywhere, not only in token engineering, how to have a more healthy development of a token value in order to, maybe there's this hope to then be able to better control the system and don't have and not having this noise of speculation and these weird signals also towards activity and work, and what is in curation, what is valued as relevant work. I mean, just imagine all the scams messaging, pumps. I don't know if you also get the pumps messages on Discord basically every single day. And of course, this is a huge problem. You say austerity in a DAO, and CEO also mentions this. Can you elaborate a little bit more? How could it look like, austerity in a DAO?
And we have not seen any examples out in the wild, right? I guess it would be something like, okay, so one example would be what Terra did recently. So there, obviously, there was some issue with, okay, if you had to liquidate 1 billion USD, what would happen to the Luna price? And then would that lead to a negative cascade and completely collapse their algorithm stablecoin? So one aspect that they did was, okay, we have, it's a quasi austerity where they decided, okay, we're going to take up some Bitcoin and back it up with Bitcoin. So you can, so that's a form of austerity, because you're effectively saying that I'm going to lock up liquidity in this other token that I'm going to guarantee redemption rights to, that you cannot deploy elsewhere. So essentially that's what austerity is, right? So in governments would be like, spend less on the military, spend less on social services to maintain your seigniorage rights for your currency for the future. So
can
I
you
guess
drop a link? Is there any write-up of this case? I would love to learn more. If you can drop a link, thanks.
Oh, no, this is my personal speculation.
See.
Well, the thing is, I've been so there was a lot of worry in the Luna. Well, Luna critics were basically saying that, okay, so if you had to liquidate $1 billion USD, so that means that the Luna price would have to adjust, right? So what would happen then? Okay, so at the same time that you're selling USD, you're selling Luna, or you're burning Luna in some fashion. So that's a negative feedback loop that just pushes your speculative asset to zero, which is also supposed to maintain the miners. So your security budget rapidly devolves when you do that, right? So so I guess they decided for whatever reason to back it up with Bitcoin now. It's a form of austerity. It's effectively them saying, okay, we cannot maintain the security of the system. We need to dial back a little bit and say we're.
Okay, thanks for sharing. Pedro, you mentioned a second case, Genesis DAO, long periods of austerity. Would you like to share?
Yeah, can you hear me well?
Yeah.
Okay, so yeah, Genesis DAO was a project from DAOstack. It was an experiment to bootstrap a community around the developments of their DAO infrastructure. And Genesis DAO was quite an early experiment. It was like early 2018. And in the beginning, it was fascinating. They were periodically sending funds. We had the freedom to experiment, to confront with challenges, with different models. But then, this is kind of like a personal opinion, but I had the impression they started to get bored or frustrated, the DAOstack team, because we were trying accountability models, we're trying community engagement, community rewards, instead of actually developing or sometimes even testing for them. And eventually rules started to change, agreements started to be made in such a way that the community DAO started to switch its focus to development. They started funding the org. And then every other community project started facing some kind of austerity. We no longer had funds to engage with the community's health, with accountability, with all the other aspects of the DAO ecosystem. Instead, we focused on development. None of that makes sense.
I see. I'm not sure. Is is DAO Stack still alive? It is, right?
They kind of went into stealth phase a couple times.
I see.
They gave up on the architecture they had at the time, and then they started focusing on a more user experience approach. But then I never heard of them again.
Yeah. Okay. Maybe it's still worth dropping a link to the DAO Stack as well. And Joe's made a comment. I hear you. And we had a book. Sorry.
One last comment, because you mentioned about dropping a link. One of the most interesting, most fun artifacts we left behind was a book called Centralized Thriving. And it's a book with very interesting articles from multiple people from inside and outside the Genesis DAO. I'll make sure to drop a link.
Oh, cool. Thanks. Yeah, Joseph. I mean, this is an ongoing dispute. Who is it? The market, the usual market comment, I would say. Maybe you can repeat yourself.
No,
you say there's no speculation, it's always the market, and the price is a signal of the market.
Yeah, there are so many posts I've made out there, but speculation is an essential part of market making.
Oops. Sound is pretty broken suddenly.
I'm in the midst of a massive thunderstorm out here.
Oh,
so
okay.
I'm not too sure how. I mean, I don't think it can be better than this. So you'll have to read my posts. I mean, is it better now?
Yeah.
If I speak,
it's a bit better. Yeah.
Yeah. Okay. If I speak louder. So market. I mean, speculation is an essential part of any market. It is speculation which actually gives continuity to the market. If you don't have speculation, your low volume markets, it will all be very, very jagged, and it won't be an efficient market. So let's not, what Rohan just mentioned, and I've actually passed the particular comment is that speculation is bad. I mean, when the market goes beyond what is real. I mean, the underlying real economy. Now, those particular swings are based on expectations, and it's actually part of the normal process. The thing, but then if it's sustained, it can get destroy the market or the exchange or whatever. That's where regulation comes in. You stop trading and all that, which is how normal markets work. But the thing is, in crypto economic systems, it is actually, it's possible to actually measure what's actually happening in the real economy and see the difference between between the market and the real economy. So it can be. I mean, the types of control mechanisms which can happen in a DAO or in any crypto economic system is far better than what's happening now in traditional monetary theory and control. That's what I'd like to say.
Yeah, thanks for sharing, and feel free to drop your comments. I mean, the crypto market is early. In many cases, in many token cases, we don't have sufficient markets yet because it's too small. But I definitely agree on, we just have so much more data to observe and make sense.
And actually real-time data.
Yeah.
Which is not there in traditional economics.
Yeah, that's true. All right. I'd like to continue now with the Web3 Sustainability Loop, as Trent McConaghy suggested. And here we first check, let's say, the version, the very simplest version, probably from this article was published in 2020. This is how I would describe the ICO approach back in 2017. I quote him again, "The image illustrates for many Web3 projects. Founders generate tokens on the left, get some initial cash by selling some tokens, middle left, build the product in the center, and then ship, middle right, ship the product to power a nascent ecosystem on the right. Then the aim, of course, is to grow the token value. And to help this, the dynamics should be designed for the value of the token to increase as usage goes up. The founding team sustains itself by selling down more tokens for fiat over time as they do work to improve the product. This model focuses on product revenue, and the challenge is getting enough revenue soon enough for teams to be able to keep contributing. So to me, this is, again, this early ICO stage model where the token was kind of with this perspective of it will increase in revenue 10x, 100x, 1000x, and buy it now at a low price, and this way to fund crypto projects. It was basically an alternative route of VC funding, rather crowdfunding. And that's it. Second step, now Trent elaborates on revenue generation in a project ecosystem, and that's the first important difference here. I quote him again. He asks, can we do better than this previous product revenue? Taking a cue from businesses and nations, it introduces, the Web3 model introduces revenue generation at the bottom right. Revenue is then looped back to workers in a curated fashion. This is the circle. Projects are chosen based on growth potential and aligned with the project's mission. Funding can go to the funding team and other project teams. They all perform work to grow the token value and network revenue, and the loop continues. So the first important difference is we not only have the product or the initial project, we rather have an ecosystem of projects. And that's a first really important difference. If we look at Web3 sustainability cycles, we are not talking about a single project. We are rather talking about an ecosystem. And the usual way how these ecosystems are built is an initial token launch from a protocol, like Boson Protocol or Graph or Near, or also Ethereum, or many other layer 1 or application layer protocols, where the protocol is the initial infrastructure and our shared centralized logic of our system to then build on top applications, services, so that many stakeholders are active. And this ecosystem is this built from these many pieces in the puzzle: the fundamental layer of the protocol, the applications, the stakeholders, the services. And this is the first important difference. And that leads to an interesting question you might want to take a look at for yourself or in the Discord. If there was this very early view of the FAT protocols and protocols having this dominant role in the token ecosystem. Now, as we are moving further up in this pyramid of applications, the fundamental protocol, applications on top, services on top. What about the tokens and the ability and the design space for tokens at the application layer or further up in layers of applications building on the fundamental protocol? Okay, let's move on, because next to this ecosystem aspect, he elaborates also on wait, here, on the option to pretty much like issuing stocks or fiat, generating tokens and disperse tokens over time, right? Not having the initial mint and then sell, rather disperse over time. Okay, I quote him again. Revenue generation can draw on ideas from Web 1 and Web 2 businesses, but with less extractive rates. Importantly, the token must be designed such that its value rises as usage rises. Important aspect. Token must be designed such that its value rises as the usage rises, but there's still one big problem. Too little revenue, too late. I'll elaborate. If rates are too high, it will either get forked and redeployed with lower rates, or it won't get adopted because it's seen as too extractive. And second, if rates are too low and usage isn't sufficient, then revenue is too low. This a little bit this chicken and egg problem of getting a business going or getting a platform or a network going. What is driving it? It's the expectation of rates, but if they are too high, it might be redeployed with lower rates. And if rates are too low, it's not attractive. Revenue is too low. Okay. Then Trent continues with, we can overcome the challenge of too little revenue too late. It takes a key change. Rather than disperse all the tokens at the beginning of the project, disperse a large fraction of tokens over a much longer period of time to the workers that are adding value to the project. It's also an important aspect. So rather than dispersing all the tokens at the beginning, disperse a large fraction over time to workers that are adding value to the project. And that's actually something that sounds super simple, and yeah, sure, that's how it should be. But there, of course, there is this tension, how to build, how to make it attractive early stage, the token launch, then decentralization, the power of investors versus the power of workers adding value, or is an investor also adding value? So there are many, many tensions here, and there is no right or wrong, other than, this is also important, for the sake of decentralization and launching a governance token, this, how should I say, there is a certain push to decentralize right away, have many players in the system, and then distribute tokens to maybe not workers, but just as many people as possible. But then how to make sure that you distribute tokens to people who are really adding value. And that's another big challenge today. Right, Samuel, thanks for dropping this link to Ms. Sari. So this is another big question. Go down the rabbit hole. Really interesting discussion for token engineers. How to disperse over time to workers adding value, while at the same time being pushed to decentralize fast. And the question of token distribution, power distribution, value distribution in such a Web3 network. But I go back to the article, disperse over time. This gives teams a longer runway to iterate towards product market fit, important, and more funds to catalyze growth once product market fit is achieved. And I call this the Web3 Sustainability Loop. The image illustrates this. It has parallels to successful nations and successful businesses. At its heart, it's a loop designed for the snowball effect growth of the system, the workers in the center, do work to help grow the Web3 project ecosystem on the right. Apps and services generate revenue using the Web3 project's tools or infrastructure, and a non-extractive fraction of that revenue is looped back. This lower arrow looping from right to left as network revenue to the Web3 community, the token holders, to buy. And then here we have this element on the lower left side to buy and burn tokens, also to a measure to increase the token value, and back to workers curated by the community accordingly, center left. To catalyze growth and ensure decent funding in early days, network rewards on the left also feed to workers. And that's this full Web3 sustainability loop. Now, I'd like to hand over the mic to you guys. Any comments here or any questions on that one? Mark.
Hi. It's interesting.
No, sorry, I unmuted myself for a second, but I think it's an excellent overview.
Wait, who's speaking? Is it Mark or somebody else?
I was speaking. Are there two marks there?
We have two marks in the call.
Okay.
Sorry for that. Okay. I think I've heard Mark Richardson. Hello. And but Mark Date, you raised your hand, right?
Yeah. So it's interesting. In Web2, we saw budgets for customer acquisition. In Web3, I'm seeing a lot of budgets for developer acquisition. And I've benefited from a few of those. I think the thinking behind this is, if you have a protocol, it's not worth much unless you've got applications being built on top of it. So I see protocols setting aside funds to build these applications to attract developers, which then will go on to attract the actual end users or the customers. So I guess that's just an observation of kind of how these protocols are kind of help building these communities and use and utility.
Yeah, totally. I also had a bit of a problem with the audio, but I think you pointed to this challenge where like Amazon would be just useless without the buyers and sellers there, or eBay would be useless. All these platforms don't make any sense without either applications or the participants there. And similar case with protocols. They are just infrastructure. But on the other hand, if we have this product market fit, like they are offering a solution for a need, then there is this potential that the protocols become really powerful, like this ecosystem with a lot of applications and agents in the system. More raised hands. I think first was Rohan, then Stella and Christian.
Yeah, so actually, I don't entirely get this, because this is similar to the company dynamic that was put out earlier with the addition, I guess, of direct real-time governance of the protocol.
Yeah. So you are asking where's the nation?
Yeah.
Or what's
exactly.
different?
Yeah. So it's just that, okay, I guarantee to release the tokens over, say, 10 years, 15 years. So it's like Apple saying, okay, I have in mind 100 billion Apple shares, but I'm not going to release it at all at once. I'm going to release 5 billion right now, and over time, as we make better products and we build better applications, we will slowly release it. So, I mean, it's not very different, right? This is not a country model, or this is basically building. It's similar to a Web2 ecosystem. In that, with the addition that, okay, it's there's no single CEO or the. And it's much more real-time governance.
Yeah, this is a question to everyone. where do you see the difference? Drop it to the chat or switch on your mic. What's different from the corporate model we know?
Hi, it's Omo Lara. I think it's way different than the corporate model because this model is based on what you would call like a robot, where the machinery replaced the blue collar worker. Now we have smart contracts that are here that can, like, I want to know more what you were talking about too, Ms. Pat, where you were saying protocol versus application. That's super important to know the difference between those two, because the protocol will be like the smart contract or the robot that makes sure the application gets paid. So it's not like a government, guys. You got to take all that out of the equation. And I asked a question, who knows, like Merkle roots and Merkle trees? I want to know more about that kind of stuff, how we can implement that into the smart contracts. Therefore, people who have the application can tap into that, get paid, and keep it moving. You know what I mean?
Yeah, nice. By the way, there was a pretty interesting token distribution model based on Merkle trees. I tried to find the link again. I think one element, as you're saying, is the policy and decision making is based on code, and everyone in the system, in the ecosystem, has to accept and comply, but also has a say in if this code is the fundamental layer of everything we do, of this infrastructure. And this is different to companies, of course.
Right. And like a gentleman just tapped in and said, and also it creates transparency. So now we have proof of work, proof of stake, proof of everything, you know, which also makes it a stronger value.
Yeah, right. An additional transparency on the code layer and transparency in the whole transaction layer. Agree. Then here I'm trying to follow the chat as well, because we have a lot of chat messages. Tatiana, would you like to switch on your mic? You say the difference in the velocity is relevant.
Yes, because when we're trying to compare it with the shares in stock market, it's not a relevant comparison like in a full extent to tokens, because we can't manipulate with like Amazon or Apple shares with the speed. We're not exchanging it directly for the services. And from many complex system dynamics, we know that there is a significant difference between this fast scale of evolution and slow one. And if we split it apart, as we do with stock market, we can manually correct monetary model only on the nation level. That's why this component, when we fix some issues, or like fight inflation or correct some market dynamics, is a privilege of governments. And so we borrow this component for tokenomics, like keeping the velocity of cash, but with the ability of control and correct the market dynamics that only governments used to have. I think it's like goes very well with Jose's comment on this ability to eliminate this barrier that used to be before, like in traditional economies.
Right. Yeah. Touching on two more important topics: the dynamics, the granularity, ability to control. Perfect. Anything else to add here? What's different Web3 compared to corporate model?
Yeah, I was going to add to someone's point just about the composability of everything and the data interoperability. So there's an incentive for a centralized company to keep someone's data, to make it not portable, so you can stay in that ecosystem. With Web3 and the composability inherent in those systems, I could take, my health data and merge them with multiple places, like Lego bricks, as it's often called. And that's a much greater value for the end user to create a DAO around, because all that data goes with them. So whatever is created from that is of much higher value, and that's potentially tokenized, whereas it has to be completely separate in the current system.
Right.
So
yeah, so this
hopefully that's
ambition of
clear.
user agency and owning your own data, your own ID, and make it interoperable, right?
Yeah, I mean, just imagine what would happen if, I think Twitter, if anyone, would be first because of this news with Elon Musk and trying to create something open source, maybe, but any social media product that exists today, it would be quite the April Fool's joke if they just said, hey, we're just going to give you all your data, you can take it wherever you want. That would never happen. And there's a reason that's the case, because these models have been built over the last decade. There's just no incentive to do that. They would lose everything.
Right.
Yeah.
Okay, thanks for sharing. The last couple of minutes are for Stella and Christian, since you're raising your hands for a while. Stella.
Thank you, guys. No, I just wanted to add that I think a lot of projects in Web3, they are facing this like constant battle between being a first mover in their area, right? But then they want to grow healthy, right? They want to grow in like a stable, sustainable way. But most of them eventually commit to accepting VC money, and then the VC money kind of comes with this bargain of, you know, rushing them into doing stuff. And so I think also a lot of them haven't understood yet that it's essentially an ecosystem, or like kind of like almost like a fractal, right? Like you start at like the lowest point and then you zoom out and just grows and grows and grows, but the structure keeps persisting, like self-similar in a way. And I think one element that, like, if I could add it to Trent's model, is probably like CC0, right? Because if you CC0, like at least like one little element of your ecosystem, it will guarantee you a little bit more growth, constant growth, I think. And I think Trent is doing this by with Token Spice, right? And so he has essentially done it, but he didn't include it in the model. And I was wondering why he didn't include it in the model.
This sounds interesting. I didn't fully get it, the CC0, but please add it to this diagram and elaborate on the Discord. I would love to better understand what you mean with the CC0 and Token Spice in this case. It's cool.
Okay,
sounds cool. Yeah. And now, Christian, 2 minutes left.
All right, I'll talk fast.
Yeah, please.
So I see this similar to Rowan as almost a traditional stock buyback that we see in companies today. Mm-hmm. And I think the difference, though, is this might actually, in the long term, open up protocols to more risk over time. And being that if at the outset there is a fixed number of tokens and say the protocol keeps 20% for the treasury and for use, well, if they're burning revenue off the protocol every time, then they could put themselves in a situation where they then have to use the treasury to fund future development. And by limiting their treasury over time, depending on how their token is engineered and what the governance structure is, they could potentially have a hostile takeover where another entity comes in and buys up a larger portion of the token base. So I think it's important to include in the conversation, what is the opportunity loss to spending that percentage of the token burn instead of putting it to a vote or putting it to another use, whether it's future development or a security audit, or as it was previously talked about, integrating, different protocols and more Legos on top. So there's a lot that can be done with the money. It's not just burn it and increase token, but there's so many other things that need to be done and need to be paid for and need to be incentivized that you really need to gauge the opportunity loss to be able to say, it's the best decision to do that.
Christian, I'd like to recommend you to check out the OceanDAO blog at Medium, because they originally burned in every single grants round. and at some point decided to stop it. And this blog posts elaborate on why, and it's super interesting to hear why. This is a cliffhanger, please explore for yourself, but obviously they had their learnings as well. And with that, we are on top of the hour. Let me close the call and wrap up, but you're all welcome to join the Discord. I've dropped the link in the chat and continue the discussion, and we'll meet last round in this first iteration of TE360 next Wednesday again to discuss governance as capital finally, and hope to see you there. Thanks a lot, everyone, for adding your comments. It was a great discussion again, and see you next Wednesday.
Thank you, Angela.
Thank you. Yeah, thanks,
Bye.
Angela. It's great.
Thank you, everyone.
Thank
See
you.
you next week.
Bye.
Bye-bye.
Bye-bye.
Thanks, so.
Bye.